All right, welcome to the first video in our vlog series, where I sit down with some of the interesting people in the mortgage processing space, including members of our own leadership team, and see what makes them tick. I'm Christopher Hussain, CEO and founder of RealKey, and besides making mortgages more efficient, I also have a passion for beer. So you'll notice we're always cracking open something special whenever we chat. On this episode, I sat down with industry veteran Rob Reid, RealKey's head of sales operations and strategic partnerships. We're going to talk about Rob's experience, why he joined a startup like RealKey, his advice for current and prospective sales professionals, what he's hearing from the industry and our users, and focusing on how RealKey solves for the utter time sucks in mortgage processing due to outdated tech. Sit back, grab your own microbrew, and let's go.
Well, I guess I'm going to start off by opening the beer because it is 5 o'clock right now where Rob is
Cheers.
at. Good to have you here.
Same here. It's great to be here. It's exciting times.
I guess this is a great way to start. Now, welcome to the first of many conversations with our wonderful RealKey leadership team. In each of these fireside chats, you're going to get to know the people behind the scenes, bringing change to the mortgage industry through our RealKey digital platform. You all know me, Christopher Hussain, CEO and founder. Today we have the privilege and honor of speaking with Rob Reid, our head of sales, operations, and strategic partnerships. Rob, thank you for taking the time through your busy schedule to be here, to have a drink with me, and taking the time to share your perspectives and experiences.
Well, I was going to turn the meeting down, but when I heard we were drinking beer, I thought I'd make some time for you.
Yeah, absolutely. Kind of makes sense. You know, in between, feel free, just take a sip here and there.
Oh, don't worry about that. Don't worry about that.
Wet the palate. So I guess, let's get started maybe with a few easy questions. While we're at it, let's start. Maybe tell us a few things about you, where you're from, what makes you the ideal person for the role that you're in at RealKey. And we kind of already got your favorite beer, Bud Lime, Coors Light. Anything cold and a barbecue, but
Yeah,
maybe tell us something interesting about yourself to break the ice too.
Sure. I'm a Michigander, born and bred here, been here all my entire life. I was raised on a farm up in the Thumb, and I came to Michigan State years ago to finish my accounting degree and stayed in the area. And actually came to the whole real estate industry when I was running for public office and needed a job to pay the bills when I was out knocking on doors. And the little company I worked with at that time provided technology to boards of realtors and association of realtors throughout the country, and an opportunity to work with them. It was worked out very, very well. I was able to leverage some of their technology to help me with my mailing list and so forth. But unfortunately, didn't win the election, but ended up working in a marketing department. And actually that was my first exit, where we sold that technology company to the mortgage division at Norwest Bank, which was kind of an exciting thing. And I guess the other things there in terms of why I'm here today is from there I went through a lot of merger mania, worked for a lot of big companies, a lot of small companies, and had the opportunity to look at the real estate transaction from a lot of different perspectives. Obviously, the Norwest Bank was the first exposure on the titles or the mortgage side, but working under the Fidelity umbrella at the turn of the century was great to understand a little bit more of the title side of the business. And then, the opportunity to build with a couple of small companies, one being 3Wide/List Hub, which was a great experience, learned a lot about startups and the pace about it. And one thing I really appreciated is startup pace is very analogous, very similar to that of a campaign. And then the other aspect of it too is again, fueling my passion to really shorten the time it takes to buy and sell real estate in our great country. Is the last opportunity I had there with ZipLogic/Lone Wolf to help them build out a lot of their business relationships and really kind of help them secure that strategic relationship they had with Lone Wolf. So again, I've been at the transaction from a lot of different perspectives, but again, it really has done nothing more than fuel my passion to really shorten the time it takes to buy and sell real estate in our country. As for something that's kind of unique about me, no one ever believes this, is I live on a farm. Been on a farm here for the last 25 years, and we grow cattle, raise cattle, Angus, Simmental, and Shorthorns, and we've shown them all over the country. We've been from shows as far west as Denver, down to Louisville, out east, been to Fort Worth, I think we've been there. I've been a lot of different places through our kids. It's a great experience, great way to raise kids, but we've had a blast doing it, got to meet a lot of great people. And we've got our genetics as far east is West Virginia, far south is Texas, and far west is, I think, Missouri and Nebraska now. So again, it's been a great experience. And every time I tell that to people, people say, no way, you're not a farmer. I guess I am.
I think that's something really interesting, that you share. When you first shared that with me, I would have never known anything about that. And I mean, I've got my delicious side hobby. You have your delicious side hobby. Well, no offense to any of the vegetarians out there. But I do love my meat, and it sounds like you are. Sounds like you're raising some beautiful cows that are
a lot of fun.
It sounds like a lot of fun.
Yeah, and through that, it had a lot of great things and met a lot of great people, and one of the coolest things is again, helping the great state of Michigan reconstitute its state fair without taxpayer money. We had our governor years ago eliminated our state fair after over 140 years of continuous running, and to balance the budget. But I found myself in a room with 12 other people years ago that were very passionate about bringing it back, and that was 8 years ago, and now we are slowly building it back up to an exciting event, the exciting celebration of the great state of Michigan. So again, it's been a great adventure. We just got done with the
Flagstar Accelerator. Didn't you also meet some of the Flagstar executives at the fair?
Yeah, they're one of our title sponsors at the fair. And so, yeah, we've been talking to those people as well as some of the other great sponsors of the fair. It's just a great experience. A lot of people are very passionate about the great state of Michigan. And sooner or later, we're going to move our company, RealKey, to Michigan, Christopher.
We'll talk about that a little bit later.
All right.
But getting into some of talking about difficult questions, you've got over 30 years of experience in specifically software for real estate and in the mortgage ecosystem. Maybe you could kind of share with us and people watching some of your most memorable achievements that you've had, lessons that you've learned that you are still using today.
Sure. Well, first of all, it's been a great adventure. I've had the opportunity to work with some very incredibly smart and passionate people, and still do. And I've had the opportunity to really accomplish a lot of great things in this space. I would think it would be hard pressed to really kind of point to one thing. We did every company. We were again very disruptive and innovative for the time of that particular company, and so it'd really be hard to kind of point to it, with the exception of some of probably the exits that I was involved with, and that is, some of the companies, when Boris was sold to Norwest, when 3Wide/List Hub was sold to Move, and then obviously when ZipLogix was sold to Lone Wolf. Those are great experiences. It's always very, very rewarding to be able to give back to the companies and individuals that took a chance on you, in a PowerPoint in some cases, in a very passionate pitch. So that was probably some of our better, my personal, the more memorable achievements, I think, is being able to reward those people that took a chance on me and the organizations I was with.
That's also interesting, because that was kind of where I had met you, was through ZipLogix and some of those real estate events.
Sure.
I remember going out, whether it was here in San Francisco or out in New York, and all over the place, we just kept running into each other and just kind of hit it off, and the timing seemed right to have you go through and join us. But it's interesting, you mentioned 3 exits in the past. That's pretty substantial. Can you kind of share with us what you feel is maybe the most important thing that you learned from those companies and those exits, like particular items that stick out in your recollection when you think of those particular companies and the exits?
Sure. This is going to sound weird, but whenever possible, use outside resources. Use a professional. Get somebody in there, an investment banker, a business broker that knows the market, knows who is in the industry right now looking to buy what they're looking to buy. These types of resources will help you in many different ways. They'll help you with, again, helping you to package and tell the story of your business, and helping you present it in the best light possible to maximize the value for not only the owners, investors, as well as the employees. And the other part of that too is again, they can help you with, again, determining valuations, reviewing valuations, and helping, again, manage the negotiations as you continue to move forward. Because the reality of it here, Christopher, is not all those discussions end to result in a deal. And the key thing there is as a business manager, you got to keep your eyes on the business itself. You got to keep moving the business forward as you continue to do this, because if you don't, it's going to be a major distraction, and you're going to find yourself further behind at the end of those discussions if they don't bear fruit. So again, I strongly suggest, and something I've learned both on the pro and con side of that, is use outside people. Again, helps you maximize the value of your business. Certainly, it's not rocket science; anybody can do it. But again, I think that for me, the value of using outside counsel and that type of transaction again helps eliminate any potential money you might leave on the table, but also helps you continue to focus on driving your business forward. And then the other part too, and we've seen a lot of M&A activity in this space and others here recently, is take care of the people that helped you build a business. We've all heard the stories of people taking the check and running, but at the end of the day, there are people that have showed up day in and day out, and as one popular site said, shredded every day, right? And from there, I'm a firm believer in rewarding people that have helped you get there, and it just makes for a great experience all along the way.
I definitely agree with that. I think it's really important in general, and it's just advice for anybody listening that's an entrepreneur, manager. You definitely got to have your, rewards and celebrations, and it's really hard, especially as fast as we're moving. And a startup is especially faster than most any other businesses that you'll do. I can tell you that from experience, and it's hard to slow down. You have feature sets come out, you have big contracts, you have fundraising events, and it's just slowing down and having a beer with everybody and celebrating. I think that's just super important. But you've worked at big companies, you've worked at startups. When it comes to startups, easy is not something that generally comes to mind. So I'm kind of curious, what was the appeal of startups, and why did you choose to jump in with RealKey at the stage that you did, out of curiosity?
Well, I think there's several factors.
Masochism?
No. As I mentioned, the pace is addicting for me. I love the pace. I love trying to make something literally out of nothing, because in a startup world, you are always continually needing more resources than you have. So you have to be very creative and innovative as you kind of move forward. You have to always ask people for seemingly impossible things, and I'm always pleasantly surprised at the response you get. The other aspect of it is it helps you really make a bigger impact faster in a smaller business environment. Nothing against the big companies I've worked with, they've done great things in their space, but it just seems in that smaller businesses, we're able to make a bigger difference faster, and that's one of the appeals of RealKey for me. The additional part of this is what we're doing at RealKey, and that is, again, trying to streamline this mortgage process. And that's very much in line with my passion over the last several decades of trying to identify things to, again, shorten the time it takes to buy and sell real estate in our country. So those two things lined up pretty well. And besides, you like to drink beer and I like to drink beer, so that kind of worked out as well too.
That worked out too. Definitely, every time we met, I think we would tell you what we were working on, what we were doing. And this was before you had joined us, and you would share with me, if you're building what I think you're building, I definitely want to be involved. I want to be in. I could see the passion. I think that was what really kind of drew me to you, and you to me, is that we both have that passion for really changing this industry and going through and just making it more enjoyable experience for everybody. But I'm also curious to hear, what point, so we're talking about startups, we're talking about large companies and all this in the fast pace. I'm kind of curious, as we're continuing to grow, at what point would you say a startup is no longer a startup? You've been through all these growths, so curious your
That's a great question, and it's going to depend on the individual company and the culture and the people involved. But usually the things that I look for is can the key people take time off and the company still continue to move forward? That's the biggest thing. The other factors I kind of figure into that is have they weathered their first major storm? Whether it could be a functionality issue, something from a competitive environment, whatever it happens, can they weather that storm? One of the first companies I worked with, we walked into the office one day and there was a fax saying that the company that we were buying all our technology, our hardware from, because we were a value-added reseller in that particular model, was out of business. so,
that sounds like fun.
Yeah, it was. It forced us to be better and react. And at the end of the day, we survived, and actually we're a better company for it. And then the other aspect of it is, and this is an obvious one too, is do you get to a point where you actually sell the company or you go public? That's a no-brainer there.
That comes up consistently with when we are talking with our investors and just in general. Yeah, definitely. That's a good point.
Yeah, and again, it's all these things are there's a lot of factors that come in. It's the personality.
We're gonna take over the world. That's really what the end statement is. Take over the world.
Yeah. Absolutely, world domination.
One step at a time. Yes, absolutely. That's what we're gonna do. Pinky in the brain, right? Which one of us is pinky? Which one's brain? I'm kidding. All right, let's not go there.
Here, I'll tell you one thing.
Let's not go
there.
That
point, that somebody once told me, if you find yourself being the smartest person in the room, go to the next room. And I'm not the smartest person in the room at RealKey, and that's one of the appeals of it. There's a lot of smart.
I'd argue we all have our points that we're really good at, and definitely we hired all the right people, yourself included. But now,
thank you.
And now we're done stroking each other's egos.
Let's get down to business.
Let's get down to business. Based on some of the conversations you're having, we are already in the time that we're recording this conversation, we are ramping up towards the launch of this product. Really exciting time, and we have what we call our Founders Club members. You yourself, the sales team, are having conversations with customers right now, brokers and lenders. I'm kind of curious, what are some of the challenges that you're hearing come up the most often? What are the things that are their pain points and is they're most excited about that RealKey is really kind of coming to solve?
Well, as I start this, do what you do best and rein me in if I get kind of going too fast and too passionate about things, okay? The thing that we hear most and we feel the most through our calls with everybody in this great industry is everybody knows the process needs to improve. It just needs to be better. It's taking way too long. There's too much dependency on paper documentation. There's too much going back and forth between the borrower and the mortgage company and the lender. And the other aspect of it is there's just still to some degree way too much human intervention in the process, both on the behalf of the borrower, but also on the originator, processor, and underwriting side as well. That's what we're hearing consistently out there. And the other aspect of it too is the fault lines have been really highlighted and drawn into clear attention here of late with the refi boom happening out there and just a sheer volume of business that people are trying to push through their existing systems. And they're starting to see some of those fissures in their processes expand a little bit more. And what I mean by that is the time it takes from app to close has been extending further. And right now in our deck we use 40 days, but we probably need to update it. It's probably closer to 55. In talking to people,
we have updated. It's substantially longer. Obviously, COVID's made it worse.
Absolutely.
When rates are starting to contract, it might get a little bit better, and technologies help with that too. But it continues. Sorry.
No, but the other aspect of it is again, with all of these processes taking too long, then there's the whole consumer side. The consumer is demanding a much more streamlined a process that syncs up with their mobile lifestyle. Everybody's on the go now, even though we're in some areas that are a little bit more locked down than others. But everybody wants to do things faster. And so the consumers are trying to drive that into the mortgage process. And the mortgage industry is trying to react to that. You see that in terms of these online notarization aspects of it. Now you're seeing now with remote closings, a lot of things, again, to your point about the pandemic, there's a lot of things that have resulted of that is really going to be, as we get further away from this and we get it under control, we're going to look back at this and see that pandemic was probably one of the biggest catalysts from us moving to a true e-mortgage process out there. So again, everything is taking too much. The sheer capacity or the demand from the industry is really starting to weigh on these companies in several ways. One is they're burning out their staff. they just can't get things done fast enough. And
I've heard that a lot, especially over the last year. I mean, everyone's making a ton of money, but burnout is real. And
absolutely.
you talk to anybody, they were, even before COVID, were already, hey, do you got time to go out for a beer? No, I got a bunch of loans I got to work on. I got some files they're supposed to close, purchases, contracts coming up due, locks expiring. Exacerbate that many number of fold for everyone. And yeah, I hear a lot of people, you add also just the emotional effects of COVID, and burnout is real.
Absolutely. And, companies are reacting in multiple different ways out there. One is they're adding staff. Some of the as when we were looking to hire people,
processors and underwriters are like gold right now.
Yeah.
I mean, talking about investments, those are the processors and underwriters should be buying the beers today, because they're definitely getting paid right now.
Yeah, I've told a lot of people coming out of college, saying, jump into the mortgage business, learn how to underwrite a loan, learn how to process a loan, because you're in demand. And again, these companies are reacting a variety of different ways. They're trying to bring more people in, and when you bring somebody new into the process, that takes time to ramp them up. So to counter that, other people are relying or resulting or falling back on poaching other people's teams. And I still remember
headhunting. Yes, exactly.
I felt bad. I was talking to a credit union in Ohio one day, and this particular person was really, really down because his processing team just left him that morning. They literally walked out and went down, literally across the road to another mortgage company, and there was nothing they could have done about it. And so there was a lot of that kind of, poaching that was happening within the industry there, because these are just businesses trying to react to the demand they were dealing with.
I think you and I spoke to a contract processing company where that actually happened, where they were telling us that they literally had their team get completely poached, and they had no more processors to process and had to go through and to do everything themselves and didn't know what to do.
Well, what they did is
I'm laughing. It's not funny, but it is real.
Yeah, because what that really results in, as Christopher, from your experience in the space, and everything you've done, is it results in higher loan costs. And that's the other thing that's happening in this industry, is the loan costs have continually gone up, and that really makes no sense given all the available technologies that should be going just the opposite way. Additionally, is in addition to that happening,
what people don't realize, if anybody's watching that's not in mortgage, because we know we're going to get some of those people, I just want to stop there for 1 sec and point out, rates are low, but the cost of a mortgage company to do that loan has gone up. So I just want to point that out. Sorry, go ahead.
No problem. And no one is ever going to say no. The old adage is make the other person say no. And what we're seeing in some places out there, in some markets, is that people are kind of inching up their rates a little bit. So people they're just not, it starts to slow down the volume of loans coming in the front door as they try to improve the internal processes to get more of the loans out the back door. And so you see that happening. And then, the other aspect of it too, and it's, as we get deeper into 21, we'll see a little bit more how the new administration is going to impact this process as well. Regardless of whether the left or right, the new administration, regardless, is always going to have an impact on the mortgage process, and that's just a given. So we're going to understand that a little bit more as we get deeper into 21, and that's going to have an impact on this space as well. But again,
back to that regulation has something to do with mortgages.
Just a little bit.
Just a little bit. Compliance, regulation, nothing to do with mortgages.
Yeah, I remember being at I don't know, I think the correct word is maybe a top 3 mortgage company who was doing a project for them, and holy moly, to see the impacts of Dodd-Frank on a major lender like that. When you walked into the building, all you could hear is the screeching of brakes as the business was just slowly, not that business, but the whole industry was slowing down to deal with all of that additional regulation.
There. I had my own office. I was, part of a large franchise brokerage, and that was, even my wife definitely remembers the exact day and time when I had to be in front of my computer nonstop for a large period of time.
Yeah, it's but again, we're a country of problem solvers, and we'll get behind this and get everything done and get things sorted out. So Yeah, that's what we're hearing is process is taking too long. People know they need it better. In the end of the day, who's really kind of being impacted the most is the borrower. They're getting very frustrated. They don't really know what's going on with their transaction. They're getting paperwork coming in for, rate extensions, as you mentioned before, because the processes are taking too long. People are saying, what's this for? And when are we going to close? And the other aspect that's kind of exacerbating this a little bit too is the real estate side is smoking hot right now. It's unbelievable how hot the purchase side is. So, there's a lot of pressure on the borrower and the mortgage company to get these deals done because, in some cases, there's contingencies to say they have to close in a certain amount of time. And if they don't, then that property goes back on the market and it's going to be snatched up by somebody else willing to pay even more money for it. So there's a lot of pressure on this space right now to get things done faster, better than any other time in the history of the space.
Well, I mean, that being said, that's kind of leading into my next question, which is, how do you see technology enabling these lenders and brokers to overcome these challenges? Specifically, how do you believe RealKey, not to promote us, but we're on a RealKey channel here. How do you think RealKey will transform the mortgage industry and technology as a whole?
Well, I think what we're going to do is our vision is to basically harness the true value of technology brings to the real estate transaction. Being able to tie into what I refer to as those authoritative sources of information. So we can pull that information on behalf of the borrower with appropriate permissions into our system to really employ what I refer to as that TurboTax approach to the mortgage process, where we can, automatically, generate the documents and conditions needed to facilitate a loan from a specific lender, literally on the fly. Being able to identify earlier in the process that, hey, Christopher, you just don't have enough horsepower to pursue that loan that you wanted to do. Deal with that earlier in the process versus waiting for that file to go down to underwriting and then be kicked back and saying that, the numbers don't work. So I believe that technology is going to do several things. One is it's going to help us move away from the paper-based transaction we have now. Two, it's going to provide a lot of visibility into the transaction. And these are things that we're working on at RealKey with our platform approach to this transaction. Provide visibility and transparency into the transaction, which no one else has done in the space. And we're not talking about reinventing a point of sale or an LOS or a desktop underwriting. We're just simply working in between the gaps of those existing tools out there.
That's exactly the thing. I mean, we know that our users have loan origination systems, they have points of sale, they have these compliance tools, and we're not asking anybody to go through and change those. Instead, being mindful of that, we don't want to go through and have them change. You need a LOS because, as an LOS stands for, it does a lot of stuff for you, right?
Yep.
So we need to still do those disclosures, that compliance, to be that central hub. We still need the point of sale to get that initial information for you. But then what about all the rest of the stuff? What about that in between that occurs? And yeah, you're again talking to our end users, and I'd love to hear more about what you're hearing on your side and how that's really a gap that needs filling.
Absolutely. Is what we're hearing out there when we show our workflows with our platform is I just remember a gentleman I just talked to 2 days ago and said, you guys are really onto something. This makes sense. And I remember another former mortgage broker who is now in, I think was doing some mortgage pricing, or I can't remember exactly what she had moved into. And she goes, if I was still a mortgage broker, I would be all over your platform. Because again, what we're doing is doing some things that are just time sucks right now, for lack of a better term. And that is, we're quickly, with our first iteration of our conditions engine, which is, our first iteration of our AI tool rather, as we're able to quickly, again, identify all, not just a standard set, but all of the documents needed to support a loan from a specific lender. This is not a standard set. It's all of the documents and overlays that lender needs. And that's reflective if they're going to keep that loan in-house or they're going to sell that or whatever. If they're working with a GSE or they're working with private investors, we're able to bring all of that document requirements to bear up front. And we make it very simple then for that borrower to upload that information. Not just the borrower, but also any proxies that borrower wants to use in uploading that information. For example, instead of, me trying to track down my tax returns, I can just simply invite my guy down here, Berkeley, Ann Arbor, and invite them into the transaction so they can upload our tax returns.
All right, well, we now all know who Rob uses as a CPA.
Well, I'm going to use that to get a cheaper rate on my taxes this year.
No. All right, no more plugs.
All right. So, but the idea there is again, invite other transaction participants, as I refer to them, into the mix so they can upload it. Insurance companies, so they can upload the insurance certificate. So again, now we are going to identify all of the documents, but we're able to open it all up to all of the participants in the transaction. And then once that information is in, we're going to review that information. We're going to review that. We're not simply just going to simply put it together and ship it over to underwriting. We're going to review that
facilitating that, making sure that, it's one thing to capture documents. And I think that's something that's kind of interesting in the industry, is that there's a lot of integrations are spoken about pretty often. And integration is actually not hard. It is quite simple. Here's some documentation, make an integration. You'll pull in a document here, a document there. Question is, what did you do with that document? Did you just toss it over to the person? Because honestly, that's the same thing as emailing it to them. Yes. And I think that's what the industry, and this is part of why I thought it was interesting that you mentioned bringing outside consulting. I think that that's also a great way to ensure you're not drinking your own Kool-Aid. Yeah, that's not something that I ever want to see within RealKey. We've
done it this way. We've done it this way.
We always want to hear from the people listening. We really want to hear from you guys. What do you want next? What's the next thing you want? What is it that would be the greatest next thing that we can do using this tool? And the world's the oyster, because at the end of the day, we are in between all these great systems, LOSs, POSs, AOSs, and we can really grab all that data and do something actually with it.
Well, you bring up a good point, because at the end of the day, it's about our customers and their journey and that borrower's journey. And what we're doing is we're building our system, our platform, our processes to listen, ask questions with our customers and our prospects, so we can understand what their true pain points are and attack them, and build a platform again that addresses those. And our first step in this journey of truly automating this whole process from as I mentioned before, that TurboTax approach. Our first step down this is really focusing on the documents. One person referred to as that document dance, the going back and forth. Taking that standard set of documents, the W-2s, a couple of years of income tax returns, a bank statement or two, and shipping it down to underwriting and let them sort it out. That's just a waste of time.
If I could tell anybody that's an MLO listening or processor, do not send your underwriter the minimum. That is how you go through and you piss them off and get them frustrated, and you end up with a longer transaction than ever. You really have to look at what you do, be foresightful, take the time with your borrower, get the right information up front so that you can go through and send them a complete package. That's how you get preferred underwriting, you get preferred pricing, which is also how you become a top originator.
Absolutely. And you know something about that.
I know nothing about that.
But the long story short is again, we're not trying to boil the ocean here. We're not going in and telling people that they need to jettison their point of sale or their LOS. What we're just trying to do is make them better. And again, we're focusing on some of the things that, and this is feedback we're hearing from the presentations we're doing every day out there, is that our process, it makes sense. It's very easy for the consumer to kind of see what's going on. It's helping to remove that word friction from the process. We're also hearing things that's kind of stuff that you didn't think about is because of our linear approach to this, is that some of the mortgage bankers, mortgage brokers out there are looking at this as a great tool for newbies coming into the space, the new originator, the new processor, because they know exactly the steps to take and the things that they need to do. And again, helps move things along a little bit more. But at the end of the day, again, it's about creating cleaner loan files that close faster, that generate happier customers, that ultimately produce more referrals. And that's going to be important. Refis are down over 40% from December already, and we're moving into more of that, that purchase market, and referrals are going to be a big part of that. So everybody's trying to make the better borrower experience right now.
That's another focus for our MLOs. Focus on purchases. Refinances are very focused on rate and fees. And if you're competing on rate and fees, That is the only thing you're really competing on. Obviously focus on benefit. And when it comes to purchases eventually turn into refinances. There's a lot of emotion attached to that. They are going to want to close regardless of rates and fees. Obviously try to give them the best you can. But at the end of the day, that is the most sustainable business. When the rates go through and go back up, guess who's going to be doing wonderful? Every real estate franchise brokerage that has a lending division. Those guys are going to have the most. Now, what you want to do is you want to tap all the ones that don't have lending divisions, and even those that do, and try to go through and show them that you can do something that they can't. Maybe it's the fact that you have RealKey. So Rob, we've kind of talked about a lot here. I'm kind of curious. I always like to give people the opportunity to give an ask at the end. What is it that for people who are listening, loan officers, processors, underwriters, title escrow, appraisers, we don't know who's watching. What is it that that you'd love to see from our listeners?
30 minutes of their time. Give me 30 minutes of their time, your time. Give me 30 minutes of your time so we can better understand your business. We can show you how we can help you be more productive. We can give you more capacity out of your existing team. We can generate those cleaner files and then ultimately generate happier customers. I'd encourage you to go to realkey.com. There's more information there about what we are doing. There's an opportunity to sign up for a demo or contact us for more information. But 30 minutes, give me 30 minutes and I'll show you how we can improve your business.
How would they get a hold of you? What's the best way to reach you?
There's several ways to do it. There's some links off our website to do it, or you can simply reach directly out to me at Rob, R-O-B, at realkey.com. Rob at realkey.com.
It's a hard name, RealKey, hard to spell too.
Yeah, I know.
That was one thing we did spend some time on, was making sure we had an easy to spell name and no way to really mess it up.
That's important. Monikers are great. Simple things. It's great. Makes for a great story too. So, but yeah, get a hold of me. I look forward to speaking with you. It's easier to call me because we'll be calling you.
Awesome. Well, thank you, Rob. Thank you all for all those watching. My beer's about done. So
same here.
Rob's is almost done too. Really appreciate the time, Rob. For more information on RealKey and how we can help you streamline the mortgage process to effectively double the loans that you can close each month. Nobody wants to do that. Let's be real. You can contact us through our website. And thanks again for joining us, and we'll see you next time with a different beer and a different influencer. Thank you so much, Rob. And
thank you for being
later.
Here. All right, see ya.